Welcome back to another episode of me, trading smart, managing risk while learning how to trade effectively. And if I do those three things on a day-to-day basis, the lifestyle that I've been working towards the past year and a half now will yield as a result. I've been trading ICT for 4 months. I've been live trading in a demo environment for, I think, almost 2 months. And I've been following my approach to the market for almost 2 weeks now. I started last week. Today is Wednesday. So this is almost the end of my second week actually following an approach to the market. And today, I went 2 for 2. Of course, learned more extremely valuable lessons because I've learned to appreciate the value that my losses bring. Each loss that I take allows me to go in there, find out what I did wrong, and become a better trader because of it. So let's get into it. But before we get into it, let's talk about the Discord community. Okay, this community is absolutely free. I built this back in September for the purpose of fostering a tight-knit community of like-minded traders who are all trying to see the same vision come to fruition, right? We all want to become consistently profitable traders. We all want to be highly successful people. So I've built this tight-knit community where we're all in here engaging on a day-to-day basis. We hop in hangout sessions right here. We like to share screens. We like to share lessons, talk about our wins, talk about our losses. It's just an awesome community. I love this. I love what I built here. And if you would like to be a part of that, feel free to join. The link is going to be in my bio, and I would love to see you inside. This is the best way to communicate with me or reach out to me. It's going to be on Discord right here. So with that aside, now we can get into today's trades. So October 16th, 2024, we had 4 executions today, 2 wrong, 2 right. And there was a very stark contrast between my incorrect trades and my correct trades. And that revealed a huge lesson, not only a psychological lesson, but it revealed how I can filter out low probability setups, because the low probability setups that I took, I did the same thing twice. But in the high probability setups that I took, I did the same thing twice, right? So let's get into it. Now the first trade was executed at 7:52 in the morning. So let's jump straight into that. Now, first of all, I have to talk about my pre-market approach. So my pre-market approach, I like to see some protraction in the overnight session. I want to see some manipulation move taking place in the overnight session, right? I really want to see intel or information from the London session that tells me there is something in motion. But in this case, if we look at the overnight session, we don't see that, right? We see that price is just simply ranging all throughout the overnight session. If we look at 7 o'clock, New York Eastern Standard Time, which is when I start trading, which would be this candle right here, look what the market is doing before then, right? Look how small these candles are. Look how small bodied they are, and look how wicky they are. Look how we have large wicks above and below these candles. So given that we're still trading this overnight range, these are not conditions that I want to engage in pre-market. But I didn't follow through with that approach. And of course, I took a very, very low probability trade. And what did I do as a result? I hurt myself, which brings me to the number one most important rule that you could have as a trader. You have to know, when are you likely to hurt yourself? In this case, I'm likely to hurt myself trading the pre-market session when we have this overnight range and price has done absolutely nothing. There's no high quality information present in the charts that I can use to frame my trade idea, and there's no volatility present, and it's high resistance liquidity conditions, and I just go in there and try to scratch the itch, right? I want to get something on, so I go in there and I just force something that's just absolutely not probable at all, okay? So let's get into it. How many times have I said let's get into it in this video? A lot. All right, so let's get into it. Still working on communicating in these YouTube videos, but I'll figure it out. We're not even at 1,000 subscribers yet, which is crazy because in the community post, I posted, how did I get 30 subscribers? And then I think like 12 days later, I had like 500 subscribers. So this community is growing very, very fast. If you're subscribed to me, I really appreciate your support. I answer all the comments in the comment section. I love getting them. I love hearing the positive feedback. I also love hearing y'all's progression as well. Share with that with me. I would love to hear it. And yeah, comment if you want, I guess. Let's throw these executions on here. First, no, we're good on that. Where my executions at? Come on. There we go. Okay, I didn't see them. All right, so right away, if you've been trading for some time, probably maybe 6 months, right away you can see like, bro, what are you doing here? And that's what I asked myself after I took this trade. I was like, bro, what are you doing here? Well, anyways, I'll discuss how I framed this trade idea. So ICT dropped some new information about the overnight range in one of his recent lectures, which was literally yesterday, right? So I'm using that information to base this trade idea right here. Basically, what I see is, mark this out right here. This was used to frame the trade idea right there. Okay. So we talked about the overnight range and how you can anticipate where PD arrays are going to form given you have a bias. In this case, I was bullish in the pre-market session based on the information that I have down here, and given that we had smooth relative equal highs resting above here, and given that yesterday we had a large downrange day, and I thought it was probable that the market would probably reprice to this huge inefficiency on the 15-minute time frame, although we never got up there. I was bullish in the pre-market session, thinking that initially we would trade higher. Whoops, not that. Initially, we would trade higher, trade up into that 15-minute buy-side amount, sell-side inefficiency, then roll over post 9:30, right? Of course, that didn't happen, which is fine. Now, what he stated that if you have a bias in the overnight or in the pre-market session, you can use the overnight range to anticipate where PD arrays are going to form at specific areas of price, right? And then all you have to do next is submit to the element of time when you are likely to get an opportunity. So using this information, this gives you that element of price. Then you simply submit to time, which would be waiting for macros. The macros are going to be your opportunities within that pre-market session, and literally throughout the entire trading session, the entire trading day. So here's consequent encroachment of the opening range gap, which is simply from the highest high to the lowest low between 12 o'clock midnight, right here, and 5 o'clock in the morning, New York Eastern Standard Time, right here. So mark the highest high and the highest low, drop your quadrants on that. Is going to be 025, midpoint, and 075. You can anticipate PD arrays forming around this price level. So if we have a fair value gap that forms below consequent encroachment of the overnight range, that is a discount array, right? Well, in this case, I see this fair value gap form around consequent encroachment of that. So I'm thinking it's still kind of in close proximity. I want to see the market. We ran this short-term high. I was thinking the market would drop down into a short-term discount, trade into this fair value gap, and then trade higher, given that we still had relative equal highs above here. And I thought the market was going to trade higher into that higher time frame, 15-minute inefficiency here. So you can tell that my analysis was very off today, which is, I mean, expected given that we had an overnight range and the market literally just didn't go anywhere. There was no information, no solid pieces of information to frame how the daily range could possibly play out. And so initially the market trade down came just shy of this, but I noticed how it left relative equal lows. So I wanted to see a run on those relative equal lows, then look for my entry model. And if I drop down to the 15 second, you're going to be like, what are you doing, dude? And that's exactly what I was thinking in this situation. Right? So here's that fair value gap. And I would not even consider this as a stop run. Look how shallow this is, right? I would not even consider that as a stop run. And what I see here is a breaker formation, right? We have a low, a high, a lower low, and a higher high. So this is my entry model, but look at the volatility. Look at the volatility in the market. Very slow. This thing is essentially dead. We're in an overnight range. We haven't done anything. There's no solid intel from the overnight session that suggests this thing is going higher or lower. This is just me wanting to get out here and scratch an itch and just put something on because I want to be right, right? So I took the market long on this fair value gap right here, taking a model 2022 entry where we have a fair value gap, second fair value gap. You take your entry in the highest fair value gap or the second one, your stop has to tolerate and move down into the lower one. So I tried this, obviously stopped out, absolutely went nowhere. It was during the macro as well, but this I would not consider a stop run at all. So that was the logic behind that trade. And I'd like to explain how I felt during this trade. During this trade, I felt a ton of anxiety, literally a shit ton of anxiety, because I knew that this was a very low probability setup. Look how the 15-second chart looks. Look how spotty it is. Look how many volume imbalances we have. That indicates that there's literally no volatility present in the market, and these are conditions that I shouldn't be trading at all. I simply wanted to scratch the itch that I felt because I thought the market was going to turn at this specific location because it was around the consequent encroachment of that overnight range, right? But this is just not something that I want to trade, dude. This is low probability. So what are you doing? So from today, I've learned how I can use my anxiety to gauge whether I'm taking a low probability setup, because in both the trades that I stopped out on, I felt this exact same way where I had a lot of anxiety before putting the position on. So, because I felt a lot of anxiety, that tells me that I'm just trying to scratch the itch or the desire to want to put something on and be right and see, the market play out to my take profit and just get that sensation of having a winning trade, right? But when I feel that anxiety, I know that I'm putting myself in a very low probability trading situation. Now, compare that to when I took two winning trades. In both of those winning trades, there was very clear information suggesting that the market was going to turn there, and I had absolute confidence that the market was going to turn there. I felt absolutely no anxiety whatsoever. So, contrast the two. Low probability trading situations, what do I feel? A ton of anxiety, a lot of doubt that the trade's going to work. High probability trading situations where I'm confident the market's going to turn, I feel confident. There's an absence of anxiety because I have information in the chart that tells me, yes, this thing is going to turn here, and it's very clear and it's very obvious. So, what is that? That's a high probability trading situation. And get this, we had an 8:30 news drive, we had an 8:30 red folder, and I was trading before that. So, I mean, it's just like just putting myself in such a low probability trading condition, very, very low probability trading position. That does not make any sense at all. Now, I only stopped out for 3.5 handles here because I took this trade off early because I knew it was absolutely not going to play out. So, sound money management, I guess you could say. Now, compare this trade idea to this trade idea. Look what happens here. This trade was it was everything, right? We take out a short-term low. Notice how we spend time under this low. So what does that indicate? Accumulation of longs. And then look at the huge displacement that we see. Very clear, very obvious displacement that we see. This is after the 8:30 news driver, where we see a market structure shift, a change in the state of delivery, a breaker formation after taking out a short-term low, running those sell stops. It's everything that I need to see. It's everything that I need to see. Now compare that to this trade. You can just tell by looking at the candlesticks here that there's just a stark contrast. Low probability, high probability. Here, I felt a lot of anxiety. Here, I felt a lot of confidence, right? So today I discovered I could literally use how I feel. Do I feel anxious? Well, that tells me I'm probably in a low probability trading environment. Do I feel confident? Is it so clear? Is it so obvious that the market's going to turn here? That tells me I have a high probability trading situation. And that happened here. And I simply took this fair value gap right here using the 1 minute chart, model 2022 entry. You take the higher fair value gap. Your stop loss has to tolerate a move into the lower one. And I was targeting the buy side liquidity above these highs. And guess what? It didn't deliver. But guess what? I don't have to be right. Why? Because I take off at low threshold objectives. See, I've been combating greed recently and taking off before the market delivers to where I think it's going to, because I've had a problem with this in the past where when the market starts to move in my favor and I start to see these large range candles move in my favor, I feel greed and I instantly think about moving my target. So how do you combat that? You force yourself and you discipline yourself to take off at the lowest threshold objective possible. In this case, I was aiming for these relative equal highs, right? So where did I take off? Before that, look where I took off, right? You see the red little caret right here at 20,000 right here. It was right here, right? So I'm taking off before price delivers to those highs because I could be wrong. And look what happened. It never delivered to those highs and this thing reversed. It would have came back and took the stop for break even. That is why we distribute our positions before the market delivers to where we think it's going to go, because we can still be wrong, right? And this is why we take partials as well, because we can still be wrong, but we don't have to be right to make money because we do things like this. This is the whole reason that I'm disciplining myself to take off at low threshold objectives, so I can train myself to take partials, train myself to take off before the market actually delivers to where I think it's going to go, because I could still be wrong. But guess what? I don't have to be right to make money, right? So I was very proud about myself for that because I did feel greed, right? I initially thought about moving my target, boom, defeated that thought. Low threshold objective, never delivered to the higher threshold objective, and this one played out. So, anxiety, confidence, fighting greed. Good. Way to come back from that loss, right? Now after 9:30, now I'm viewing this move initially lower as a Judas swing, and I was watching price deliver to Tuesday's daily low. I was anticipating it to deliver there before we even consider looking to fade this move, right? Because right out the gate, it was very weak, very, very heavy. We had a premium gap opening, very small opening range gap. So small opening range gap. We also had decoupling of the averages when all three of the averages are not moving together. So if I load my SMT layout. Let's see. And this happened yesterday as well. And I used this yesterday as well to frame a trade idea, which ultimately ended up playing out, but due to market conditions, it shook me out. So we can see that at 9:30 right here, the NASDAQ and the S&P are moving lower, but the Dow is just moving higher. What does that tell me? That's kind of like the canary in the coal mine, as ICT would say. That tells me that, something's not right, something's about to happen. The Dow is literally moving the exact opposite of how ES and NQ are moving. So that tells me something is up, something's not right. This tells me that I can look for something on NQ that would indicate it would potentially want to go higher and start to move in sync with the Dow. And that would be a good indication to go long, right? Look what the Dow is doing, the exact opposite. But that is also an indication of challenging market conditions. And we also had a small opening range gap. So whenever we have a small opening range gap, my first protocol is to wait out the first 20 minutes market open, because I want to wait until the first element of time, the 950 to 1010 macro, when we have a small opening range gap, because that is indicative that we will have challenging market conditions. We can expect a lack of precision. I don't want to be quick to engage this thing, right? So drop down to a 15-second chart. And I quite literally did the same thing that I did earlier. So on the 15-second chart, I see my entry model, right? I have, I guess you could call this breaker, right? We have a low, a high, a lower low, although very, very shallow. It's kind of the same thing. It's actually literally the same thing that I tried. Where was it? Right here, where we have a very shallow stop run, right? That's not really what you want to see. You want to see price dive below that liquidity, dive into that liquidity, then show you something. And at the time, the 15-second chart was the only chart that was telling me to get long. There was nothing else telling me to get long but the 15-second chart. I could only see my setup on the 15-second chart, right? So what does that tell me? This thing is not yet ready to move higher. So I try it long on this inversion fair value gap. Once we invert that, obviously it stopped out here. In this case, I felt the same exact thing that I outlined earlier, where I just felt a ton of anxiety. Like I felt I was just trying to scratch that itch to just get something on there, right? Because I wanted to catch the absolute lowest low of this move. That's not what I have to do. I could literally just sit still, demand more intel, wait for more information, let it be very clear and very obvious that the market's going to turn here, and then I can participate, right? I don't have to catch the lowest low. Another lesson from today. But here I felt the same thing as earlier, a lot of anxiety, no confidence whatsoever, because I was just staring at that 15-second chart like, give me an entry, right? I'm looking for my entry, right? Just sitting there hunting that thing down. So if I go to the 1 minute chart and we look at the execution here, we can see that there's absolutely nothing on the 1 minute chart telling me to get long. Besides, we have this up close candle, right? This was basically what I saw on the 15-second chart. That was an entry model, but no other time frame agreed. We never see a market structure shift. We do see a change in state delivery on the 1 minute, but we never see a market structure shift. We still respect this bearish order block right here. So if I just outline this right here, see how we're still respecting that, right? So although we do have a change in state delivery, look left, and we're respecting this premium array. And notice how the market leaves those relative equal lows when we had that shallow stop run, right? Not necessarily, I wouldn't necessarily classify this as a stop run simply due to how shallow it was. I think we came like, what, 1 tick below that low? 2 ticks below that low, right? So I would not really consider that a stop run. Now the real move comes once we do run those relative equal lows. Then we see this large displacement. And now I have multiple time frames telling me, okay, this thing is going to turn during the macro. And if we look at yes, we also had, this is yes, right? Yeah, here we go. We also had an SMT divergence. So you can see how ES is not willing to run those relative equal lows. Switch back to NQ. We can see that NQ is, right? So we have an SMT divergence. That is another thing that I can use for more confluence to help time the market, right? Just wait for an SMT divergence, something to add more confluence. But once I see indication that, yes, this thing can turn here on both the 15-second and the 1 minute and the 5 minute, because look what we see on the 5 minute as well. This is simply a candle pattern that I This is a candle pattern that I typically see repeat whenever we have market reversals, how we have these last two down close candles, and then we have one large up close candle that creates that change in the state of delivery. Notice how we treat the order block, boom, right? Trade back down into it, hammer it right there. And I use this intel to frame this trade idea here. I was viewing this as just a bullish order block forming. This gave me an opportunity to trade the market long when it reprices down to a short-term discount. If I drop down to the 1 minute time frame, I know that this is a market maker buy model, and we're clearly now on the buy side of the curve in the market maker buy model based on all the intel given here, right? We're clearly on the buy side of the curve. So when the market started consolidating here, I was viewing this as reaccumulation before redistribution. I was using the first presented fair value gap as my draw on liquidity. I was targeting the new day opening gap that is literally lying within that first presented fair value gap. I targeted that. I took off right there. Had a limit order there. Got filled. And on the 15-second chart, I was viewing this consolidation as reaccumulation before redistribution. Sorry for the dog interruption. And notice how we have this large down close candle that lays its body across this short-term low. What does that tell me? The stops have been taken under this low. The damage is done. And once we invert that fair value gap here, and we also leave a fair value gap here overlapping it, that's my entry model right there. Fair value gap plus inversion fair value gap plus stop run on liquidity, right? So I was just viewing this as reaccumulation before redistribution, and I took the market long, trading down into the inversion fair value gap with my entry, my buy limit order 2 ticks above it, and I got filled inside of this fair value gap, and then I took off at new day opening gap below. So that was a very quick trade that played out fast, and I was just simply doing what? Spotting the reversal, trading the continuation. I don't have to catch the lowest low. I don't have to, right? I can use that information, then look for something to get on side with that. And given everything that I was seeing at the time, it was clearly indicative that this thing was strong, I thought it would reach for the buy side liquidity above these highs and never got there. It doesn't have to. Why? Because we take partials and we take off at low threshold objectives. That's the whole point of this. So I learned a lot today. If you learned something as well, please let me know. How did you do today? Let me know. Drop it in the comments. I'll respond and talk to you later. Goodbye.